Bitcoin might be gearing up for its next big breakout. And this time, the signals are everywhere for what might be the start of a brand new bull cycle. One chart from Charles Edwards of Capriole Investments has nailed multiple Bitcoin rallies in the past, and it just flashed green again. So, what's the signal? Liquidity. And not just US liquidity, global liquidity. Because when liquidity goes up, risk assets like Bitcoin don't just rise, they explode. Let's rewind to 2020. The Fed pumped over $3 trillion into the system. Bitcoin, it went up 500% from $10,000 to $67,000. Then came 2022, when liquidity dried up. Bitcoin collapsed back to $16,000. But in 2023 and 2025, liquidity grew again, and Bitcoin surged 180% in just 7 months. Now, here's what's crazy. US liquidity is rising again, even with no rate cuts and while the Fed claims to be tightening. Behind the scenes, it's a different story. The Treasury just announced $1.6 trillion in new debt issuance over the next 2 quarters. That's a tidal wave of money entering the system. Reverse repo is draining. Treasury General Account is being tapped. The standing repo facility is still open with a $500 billion cap. Translation? The money printer is going at it again. And the Fed? 2 members wanted to cut rates last meeting. That's a crack in the hawkish wall. Zoom out. Global liquidity is rising too, especially from China. They're not cutting rates publicly, but they're stealth pumping credit into their economy. Bond issuance is spiking. Local governments and state-run firms are borrowing and spending like crazy. Historically, China leads global liquidity trends by about 2 months. So we've got 2 of the world's largest economies quietly flooding the system with cash at the same time. That's not nothing. That's everything. And it's already showing up. Bitcoin ETFs are buying up supply. On-chain data shows Bitcoin is leaving exchanges. Stablecoin issuance is up. And thanks to legislation like the Genius Act, trillions in stablecoins are expected to hit the blockchain. Massive liquidity that could flow straight into crypto markets. Meanwhile, institutions aren't pulling back. They're scaling in. This isn't retail's fear of missing out. This is smart money preparing for a new phase in the cycle. And let's not forget politics. Trump has made it clear he wants lower rates and a Fed chair that listens. That could mean even more monetary easing on the horizon. So what happens next? If this liquidity expansion continues, and it looks like it will, we could see a multi-year run in Bitcoin and other risk assets that takes us through 2026 and beyond. That doesn't mean go all in, but it does mean this is a moment to be paying very close attention. When liquidity rises, Bitcoin rises. And right now, the floodgates are opening. This has been your shot of biz, finance, and motivation.